Joining us this morning, Ed Yardeni is with us, Yardeni Research President. Ed, good to have you back. Good morning.
Thank you. Good morning.
You've been fairly constructive coming out of this rough April period. Are you finding a hard time getting reasons to stay constructive right now?
No, actually, the problem is that there seems to be less to worry about, which is worrisome. You know, we have nothing to fear but nothing to fear. When that happens, we got to look out for what we're not expecting. But I think the market's become very jaded about these tariffs, and rightly so. The game changes all the time, and I think on balance, it's in everybody's interest to come up with some solution to this that doesn't cause a recession in any country, or certainly not in the world economy. And then we've had issues about the resilience of the economy. I think what everybody's missing, or a lot of people are missing, is the consumer's resilience is attributable to the aging and retiring of the baby boom generation. I'm a baby boomer. I have a lot of friends who are baby boomers. I'm still working for a living, but a lot of them are retiring or are retired. And guess what? They've got no more wages and salaries. But when you look at the household net worth, you find that the baby boomers have half of the household net worth, and the total is $80 trillion, not billion, $1 trillion. So, you know, everybody's like ignoring this elephant in the room. The baby boomers are spending money. And I agree completely with Sarah. You want to watch initial unemployment claims, and they're remaining low. And the reason they're remaining low is that the employment gains are occurring in all the areas that the baby boomers are spending money on: leisure and entertainment. They're spending money on healthcare, financial services. That's where the employment growth is. And I don't care about how hiring freezes. They may occur in some places, but they're not going to occur in these industries.
Yeah, you've been on this topic for a couple of years now, this pig in the python wealth effect. And your other point is that it's not like they're going to just bequeath a big portion of this wealth. They are going to spend it, in your view.
Well, they're going to spend it, but look, the kids, we didn't really like their friends. They didn't listen to us. They didn't clean up their rooms. Why leave them anything? $80 trillion, it's going to be hard to spend all of that. And I know from personal experience, mine and my friends, that a lot of us are helping our kids. It's not cheap out there. The rent is high. Auto insurance is crazy. And so I think a lot of the baby boomers are already transferring some of their wealth to the youngins. And I think that's another reason that the economy is remaining resilient.
Right. Where are you right now on earnings for this year and next?
Well, the key number is, what will analysts be thinking that earnings will be at the end of the year for next year? And I'm very happy to see that over the recent few weeks, the earnings expectations for next year have leveled out around $300 a share, which is what I'm looking for. I'm looking for the earnings per share at the end of this year, thinking about what will happen next year, will be $300 a share. You put a 20 multiple on that and you get 6,000. You can put higher multiples, which is what the market, I think, will do, maybe back to 21, 22, and you get 6,500 by the end of this year. And then we can start talking about 7,000 next year.
You know, Ed, I always ask you about the bond vigilantes, since you're the one that coined the term. Where are they right now, and how close do you think they are? There have been a lot of warnings from folks like Ray Dalio and Jamie Dimon, and we saw a reaction to when the bill passed the House. Yeah. What's the status?
I don't know what it is about these billionaires. They made a lot of money, and they're so depressing. You know, why don't they be a little bit more upbeat about the outlook, so the rest of us can have a shot at being billionaires instead of scaring the living daylights out of us? But so much for my editorial. The reality is the bond market is huge. We have the largest capital markets in the world. Foreigners continue to buy our securities, including our bonds. There isn't going to be a debt crisis. And if there is going to be one, it'll probably last about 2 weeks. It'll scare the living daylights out of the politicians. And maybe we'll get a big, beautiful bill that actually will reduce the deficit. That's the problem with this bill, is it really doesn't address the issue of how do we reduce the deficit? What are we going to do about interest income? But for now, the bond market has been able to absorb the large deficits. And everybody keeps looking at the debt, forgetting the fact that somebody's buying that In other words, all that debt is also a lot of assets that are being purchased.